All right. So I can see the people are coming in. Today, everyone, we're talking with Jeff Holman. He is a fractional legal resource for small business. I gotta hit go live here manually on Instagram. I don't know why. It's like DIY over on Instagram. So Instagrammers are joining us now. We're gonna play the intro reel, and then we're gonna learn a little bit more about Jeff, and we're gonna get into some conversations about his experience with franchises. We're going to be talking about patents, trademarks, IP, the whole fractional service provider business model that he and his firm have. And it's going to be great. We'll be taking your questions as well. So please stay tuned. We will be right back.
I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Are you thinking of growing your business or beginning a journey into entrepreneurship? Take a shortcut to success by buying an existing and profitable business the right way. Visit businessbuyeradvantage.com and learn more about my online training, group coaching, and consulting services designed to help you win.
All right, Jeff Holman, welcome to the show. How are you today?
I'm doing great. It's a pleasure to be here, David.
Awesome. I'm glad that you reached out. You and I had a touch point pre-call a couple months ago. Thankfully, we live in the world of AI. I was able to record and take notes of our conversation, so I was able to quickly get up to speed. And I'm sure that that while AI might be helping me with my interviews, I'm sure it's affecting the world of legal practitioners in a big way. I can only imagine.
Oh yeah.
Jeff, why don't we kick things off by telling us a little bit about your journey into the world of law and how you ended up creating a fractional legal team?
Yeah, happy to do that. I might be one of the most unconventional attorneys that you'll run into, just because I don't know if it's my background or my personality or maybe a little of both, but that's what's got me to where I'm at today. So I bring a mix of electrical engineering, kind of really systematic thinking, then legal. I got into patent law, so I was helping people protect their inventions for a while. And then I'm like, I need an MBA so that I can speak business with my clients who are doing a lot more than just patenting stuff. They're building entire companies around that stuff they're patenting. And that led me from an outside counsel role in a law firm to an inside counsel role to a funded startup where, they'd raised, I think, 70 million by the time when they hired me. And we were well above that, double that when I transitioned out. My transition out was maybe happenstance a little bit. It was coincidental that I turned into a fractional general counsel unintentionally. We were just going to transition from me to somebody else when the company moved to a different location. And that transition just took a long time. And all of a sudden I found myself in a role that at the time there wasn't a word for it, but now we would call it a fractional general counsel. The last part of that story.
You were only working with them part-time, and you were starting to pick up other clients?
Yeah, I was full-time with them for a couple of years. They said, we're going to move from Utah, where I'm located, to North Carolina. I said, that's great. I'm not going with you, but I'll help you hire somebody to replace me. They said, fine, let's do that. And what I thought was maybe a 2-month, like let's get them transition period, turned into a 1.5 years. And in fact, they're still a client today. They since hired somebody. They've cycled through that phase. They don't have anybody in house anymore, and so I'm kind of their guy still. And that was I wish I could say I planned it and it executed exactly like I wanted to, but it was really unintentional, coincidental falling into this. And that's what made me realize, like, when I got there, I'm like, okay, this is a really good situation for me and a good situation for them, but there's still some issues because there's still this issue of there's a breadth of legal issues in every company, and I'm one person with one skill set, and there's this bottlenecking issue, right? And so I'm like, this should be a team. Like, why don't we have just a fully staffed in-house legal team and make that available on a fractional basis? So that's that's the path to where we're at today.
Well, I can see the value in that. I mean, you mentioned your background in electrical engineering, and we're going to talk a little bit about patents and stuff. I have read a patent application before, and I'm not a patent expert, but I was curious, and it was part of a package of documents in an M&A package. So
Mhm.
I opened it up and I read it, and I'm pretty certain it was written in the English language.
Maybe, maybe.
But I had a really hard time understanding what it was talking about. And there's a whole subset of like, jargon and a different vernacular and
Yep.
ways of thinking about things and concepts, I guess. And so really to practice in that area, you really do need not only the legal background, but the technical stuff must be
Yeah.
super helpful.
Oh yeah, yeah, yeah. You need the technical background, and you need the right technical background for the right type of patent, right? Mine's electrical. I've done a lot of software. I've done a lot of hardware stuff. I've done some like what I would call mechanical electrical or chemical electrical or electrochemical stuff like that. But I don't know the chemistry, so I rely on the
Right.
inventors a lot, and I bring my legal expertise and the part of technical expertise that I have to those situations, and we get it done. But it's very technical. And patents, I mean, the way they're written, they're not very user friendly. And you read stuff, in fact, it confuses the inventors. The inventors like, I own, the entire world of X, and you're like, no, you describe something really broadly that might not even work, and then you wrote really, really, really narrow claims. So what you own is a slice of something that you're not even doing yourself. There's this really, really weird, uh, I don't know, aspect of patents, and they're not very well understood, like really broadly misunderstood, I should say.
So tell me then about your firm. There's multiple lawyers. Can you talk about sort of the different specialty categories maybe
Yeah.
that are represented on your team?
Yeah, yeah. So when I looked at this, I'm like, okay. In fact, I did this when I went in house, and I said, I'm one guy. I was the only attorney there. Legal. If you map it out and you say, here are all the functions of a business, where does legal show up? It shows up almost everywhere to some degree, right? Sometimes more frequently, sometimes less frequently, but it's almost everywhere. So you look at it and you say, you kind of need all the disciplines. And so when when I realized I'm one guy doing fractional general counsel stuff, we really should be a team to cover all the disciplines. It was, we need to cover the major things for the companies we do, which are startups and scaling companies, is, forming the business, fundraising, partnership things, team hiring, firing types of issues, partnerships with your service providers or your vendors, those supplier relationships, and then customer interactions. Then you get into that, and you say, okay, IP. People are building. Usually, our clients are innovators, so they're building a platform, a product, some type of brand. So they want to protect that and build around that. So there's IP in there. So our team, with my background, I'm pretty good at IP and general counseling stuff. So we have general counsel roles, we have patent role, trademarks, we do employment and labor, we do contracts, a lot of contract, anything that's just kind of general corporate contract stuff, we do that.
Right.
And then entity formation and governance. And then we even brought eventually, I was really resistant to bringing on anybody in litigation. I'm like, don't do it. It's terrible for your business. But if you're in business long enough, you can't always avoid the disputes and even maybe litigation. So we eventually brought somebody on our team to help the clients that were kind of unavoidably experiencing litigation issues in their business too. So that's our team. We're only 5 people. So I probably made it sound like all the disciplines we cover, there's 25 of us. They're not. It's 5 people. A couple of us have some crossover on different areas, but we cover kind of 95% of what every startup or scaling company needs. And if there's specialty items outside of that, we, draw on our networks to bring other people in for those issues.
So if I think about traditional law firms,
Mm-hmm.
I can think of some that are near here where I live, where it's like a big sort of partnership with associates, and they've got a lot of different
Yep.
specialties represented in there too. I guess the difference between that firm and your firm is the way in which you sell the services to the clients. Would that be accurate?
Yeah, very much so. I mean, there's a part of me that I struggle with this. I'm like, well, how, I love strategy, and I'm like, well, how are we actually different? How do we, and a law firm has the capability, they have the expertise to do this. Large law firms could do this. They could outrun us any day of the week, right? This is the classic startup, move fast, break things type of stuff. but really niche down on what you offer versus the behemoths that candidly they could do this and outrun us, but they never will because their business models are structured differently in a way that doesn't make it really possible for them to do this.
It would cannibalize their own revenue.
Yeah, well, a couple things. Large law firms, they don't really want to deal with this stuff anyways. Like, we're dealing with the minutia in the business. Large law firms want the transactions. If it's not 250K or more in a deal, like, they'll do it just so that they can eventually get the large $1 million deals, right? But they don't want it in the first place. The other thing is there's a lot of gatekeeping, and I'm sure you've seen this. You call a law firm, and if you haven't seen it, it exists. Like, you're in a law firm, there's a partner who's like owns the client relationship, and then they gatekeep that entire relationship. They don't want other people talking to the client if they can help it, and so the hierarchical structure, even the compensation structure, most times really makes it difficult to get like free access to the full legal team. Whereas if you were to hire an in-house legal team, they'd all be sitting down one corridor in your building, and you just walk down the hall and be like, "Hey, Jeff, I need this. Tyler, I need this. Trevor, I need this." And you just talk to who you need to talk to. And that's really that's one of the things we're going for is we want you to feel like we're just an extension of your team. If we don't, if you don't feel that way, we've done a few things wrong, starting probably with billing, the way that we bill, because if you're billing hourly like these large law firms, it's just people don't even want to call you in the first place. And then when they call you,
they don't know what the bill's going to be. Yeah.
They know you're going to get charged every single phone call. They don't know what that's going to lead to because there's just kind of undefined scope of work that just happens. And then you see a bill at the end of the month. And, so all these things just add up, and nothing wrong with law firms. They're just not practicing the right way for what companies at this size and stage of business really need. That's all it is.
So I want to explore how it is that you sell your services. Like, we've had a few fractional people on the show here. We had a fractional operations we had a guest last week, actually.
Yeah.
And they sell a certain number of hours of per week of somebody coming in and like sitting with them. But they're doing stuff every week and monitoring stuff every week and maybe making tweaks and improvements. Whereas a lawyer is typically, there's things that occur, mileposts we reach, or events that happen that then require the input from someone on a legal basis. So can you describe exactly like how you sell your services, what it would look like for a typical client who wanted to bring you on board?
Yeah. So because of that difference, right? If you're at the stage where you don't need stuff on a regular basis, then you're probably going to engage us or somebody else on what I would call a transactional basis. You're just going to, hey, I got a project. Let's work on it. Let's get it done. Might be a patent, might be a contract, might be hiring somebody, it might be whatever. But when companies get to a certain size, they have kind of this steady stream. Not everybody's got a steady stream of patents or a steady stream of HR issues in their business, but you have just this ongoing, like, we've got this issue this week, another issue that week, and maybe a couple of skeletons in the closet that we've never really kind of ironed out, those documentation issues that are going to come up when due diligence happens. And so that's the point when people usually hire us for the fractional legal team services. Prior to that, it's going to be transactional. But for our fractional stuff, it's a flat monthly fee. We do all of the accounting internally. So we're tracking hours and stuff like that. And the engagement, the monthly retainer amount is roughly based on hours, but we don't necessarily transfer it to, hey, you went over and we're going to pay an extra 6 minutes this month. It's kind of this ebb and flow. Like, some months are going to be high, some months are going to be low. We look at the trend more than the month to month hourly type of capacity.
So I want to ask you then this question because of the way you're describing it. So is it like saying I get I don't know, I get 120 hours over the course of the year and you're going to let me pay by paying a flat monthly fee? Would that be a way of kind of describing it?
That is a way to describe it. That is actually more from a client perspective. If you're even talking about hours, then I think we're doing our job wrong. We want you to
Okay.
feel like you've just got access to us, because hours here's the main problem with hours is, aside from the fact that nobody ever wants to track their hours for billing purposes anyways. The main problem with hours is it creates this mental block for clients where they say,
It's a
if I
hurdle, right? I don't want to use one of my hours in case I need it later.
yeah, and that's like for we attorneys have done ourselves the biggest disservice where we're now seen as these vending machine, resources. Like, you need more hours, you put more money in the vending machine, you get it when you want it, and it's like that's ruined a lot of the practice of law for many people. But what it should be is, why shouldn't we be operating like your fractional COO, where they just say, "Hey, I need you." And you're bringing value. I'm going to contact you when I need you, or when I think I might need you, so you can tell me if I'm right or wrong. Not this, hey, try not to call the attorneys because we don't want them to start the time clock on us. And I don't know if that exists for hourly fractional COO guys. I think the mentality there is probably even different than it is for lawyers. But lawyers have done an amazing job at telling people, don't call us, because we don't really want your work, which boggles my mind.
So then how do you avoid the scope creep? Because I mean, obviously the fear from the practitioner's point of view is if I'm paying a monthly fee to get legal services, that now the door's been open for me to try to enjoy as many of them legal services as I can, right?
Yeah.
So does that create then another problem for you, or do the practitioners always have overblown fears about what really happens?
No, it happens. I mean, the key to what we're doing is communication. We have to be in constant communication, both to provide great legal services, but also to manage the relationship and expectations. Because we do have some clients who come in and they're like, "Oh, this is great," so we start out with packages. We'll do like a roadmap.
Yeah.
We'll say, "Hey, what do you have coming up? You mentioned milestones before. What are your major milestones coming up in the next 12 to 18 months? Let's map those out. Let's start to track the legal issues that are probably going to come up with those, the things we need to either prepare for or do. And we'll just get a sense for what the scope is going to be. And then we'll track to that. And there are a lot of companies who, like you say, once they have you on board, it's the same thing as when I was hired in-house for the first time. They're like, we need someone to help manage our IP portfolio. I go in for the job interviews and it's getting close to hiring. And they're like, just so you know, we have an entire backlog of sales contracts that are going to need your attention. And so I know that's not really what we're hiring for right now, but that's like, we're going to need you to because so same thing happens. We've got these things coming up in the future and it's, we're working towards them. And the minute you're hired, it's like, oh, by the way, there's this litigation that we received the other day. And we meant to respond to these guys. So it does happen. We just have to manage it, but we want that to be our job. We don't want that to burden the relationship. And so our team internally is doing that, and they're managing that, and they're watching the usage and trajectory. We just don't want that to be a part of the conversation that makes anybody feel like they shouldn't be calling us to help them with the issues they've got. Because that's what we're good. We're good at that. We can help you solve these issues, probably in an economical way, but it's not if economics are like the hurdle to actually having the conversation.
So first of all, we got people that have popped in here from all over. We got Victor, who's tuning in from Nottingham over in the UK. Good to see you there today, Victor.
Awesome.
Mark asks an interesting question. He says, this non-hourly sounds like what I have read in a book, The Revenue Revolution for Law Firms. Great point, but it seems like it is super hard for clients to get over. Alan Weiss talks about this as well, and I've seen some other Alan Weiss stuff. So were you inspired to try this by something that you read, for example, or came across someone else doing?
No, I haven't read the book. But I just did it because when I got into in-house, I've been doing hourly and project-based work for a long time. A lot of patent work is project-based. It's like you work for IBM,
Right.
they have tiers, and it's just like, what tier patent is this? And it's a flat fee and get it done. When I went in-house 2 weeks in, I'm like, I think I've been practicing law the wrong way. Like, I've been making it hard for my clients, not intentionally, of course, but making it hard for my clients to actually like engage me for work. Like, how dumb is that? I want the work, and I want them to feel like they can call me whenever. So I started, practicing differently. I didn't read the book. There are a lot of people doing it right now. There's, Matthew Kurbis is talking about this revolution with AI and the death of the hourly attorney. So there's a lot of talk about it. There's just, a lot of hesitation. If you're in the attorney forums and you talk to people who are thinking about it, they don't know how to get away from it. And part of it in my mind, my team internally tracks hours. If I can, as soon as I can figure out how to get them away from that, I'm doing it. I don't know how to do it. They're more operationally minded than I am. These are the non-attorney staff, so they know how to do this better than me. But I keep telling them, as soon as I get an in here, I'm going to get rid of the hourly altogether, because I don't want that. You go to a consulting company and they hire you for outcome-based projects, not the hourly rates. And the rates of consulting companies, I've got buddies doing this, and they're charging much, much, much higher fees than I am, and people pay it because they want the outcome. And yet we're so focused on did you utilize your time correctly, or whatever. We've misaligned the entire communication in my mind.
We do the same thing in our consulting work. Like when we do a buyer insight analysis for someone who wants to buy a business, or we do an MPSP evaluation for a business owner, we have fixed pricing based on the size of the business according to revenue. So it's just a simple little matrix. Like, this size of business, this is what the price is. And we find it easier to sell that way because when I first started, I didn't know what to do. So I did the hourly thing, and I would get questions from people who had never in their life hired a consultant before. And the question they all want to ask is, well, is this going to take 12 hours or 2?
Yeah.
And because they're fearful that they're letting letting a taxi meter run without really knowing where they're going, and it's just going
Right.
to keep adding up forever, right? So I definitely see the value there. Um, and so, like, let's look at it from your client's perspective. Has it been received? I mean, you talk with your clients, like, how do they feel about it? What sort of feedback have you gotten from using this sort of model?
Oh, they love it. I mean, it's they constantly come back and they tell us, "Hey, we're so glad to have you on the team," and that's the best compliment I can get. If you feel like we're part of the team, then, because nobody else feels like their outside attorney they're paying hourly as part of their team. They just don't. So when somebody says, "Hey, we're so glad to have you guys on our team," that's the highest compliment I can get. And so they love it. We track it, and every once in a while we get clients that receive an email from my team and they say, "Hey, we're trending upward." Sometimes we're trending downward. Most of my clients, fortunately, are trending upward. We're trending upward in usage. Do you want to look at, do you want to look at stepping up the monthly rate, or do you want to do you think this is going to, level off again, and we'll just do a one-time coverage of this? And that's how we handle it. But they love it. And in fact, I had somebody the other day who, I think he's coming in as a client. I talked to him a few months ago. He said, "I love your model. I heard about you on a podcast and wanted to reach out." We reached back out to him a couple weeks ago, and he said, "Hey, I'm ready to get going. I've got this business. I just want to feel what it's like to work with a team like yours." And I've never had anybody say that to me before. I want to feel what it's like to work with a team like yours. I'm not sure any attorney has ever heard those words before. I want to feel what it's like to work with you. And I thought that's exactly what I want my clients to do. Because I feel like, with the background I've got and having worked outside and inside, and I've worked in these companies, I own some companies, like all of this stuff, I know what it's like to be paying the bills. And I know how frustrating it can be when you're like, I want something done, but I feel this hesitation to actually use the people who could be the best resource for me. And so I want to create that emotional connection, if you will, so that people actually feel a difference when they work with us. So,
Well, I mean, you know, outside of, litigation or someone getting sued or a regulatory thing you have to deal with, the reason why people engage with attorneys to do things like register a patent is because they've got some kind of ROI calculation going on in their head, right? They want to protect that intellectual property so that they can then exploit it to profitability in some way going down the road. Can we talk a little bit about that? Because you mentioned briefly the kinds of businesses you work with. Could you give
mhm.
us a little more detail, like the size of these businesses, and what sort of pursuits or sectors they might be in, just so that people who are listening can have an idea of like who you're working with?
Yeah, for sure. So our primary customer base is in e-commerce. So they're building new products. Typically, they're pretty much all around tech and innovation. They're building new products and selling them on e-commerce or retail. They're building new SaaS platforms and trying to launch that. They're tech R&D guys. So a lot of these guys are like deep tech research on stuff 20 years ahead of its time, funded by the government, right? Maybe working at a university or with a university. And then our fourth category is kind of this, all of these other tech-enabled service companies that are working with our other clients who have said along the way, hey, we need somebody, can you do our stuff too? So it's really kind of tech, centric clients. And then the size of clients, we're startups and scaling companies. So we work with people anywhere from the guy who's, the gal who's got the first idea to, I want to launch this thing, up to companies that are tens of millions, maybe $100 million in revenue. That's probably an outlier for us, but we work with some of them. But we're just in that range where people are it's the 0 to 1, they're starting, founding, trying to get traction. And then we're the people who've got traction and they're like in scaling mode. And often those are the times when people come to us and they transition from these transactional one-off services to say, hey, I'm seeing enough stuff, different stuff, but enough stuff on a regular basis. We need to bring you in and just have your team available at a predictable cost on an ongoing basis, just to take care of stuff for us.
So if I can totally imagine a company that's working on something totally innovative, or someone who's bringing on investor money to try to grow some kind of online brand that they hope to then exploit going forward in the future. Like if we think about the first couple of years of Amazon, right? They're not quite sure what's going to happen, but here's the aspiration. Investors are plowing money into it. Yeah, you got to make sure all these things are locked down. A lot of the viewers in my audience are in the small business world. And a lot of it is owner operated kind of businesses. They're doing service. They're not rapidly scaling, sort of brands. They might have an important brand in their neck of the woods. And so, what would be the milestones that people should be looking out for in a small business to make them pay attention and say, hey, maybe I should take, some of these IP things a little more seriously. Like, even though I've been using this certain trademark or brand name in my business for years and years and years, I can demonstrate its use. I've got, my company name registered with the state, attorney general or whatever, and I own the URL. Like, what more do I really need?
Yeah.
Like, at what point do you start to say, like, there's serious, potential consequences for not paying attention to this stuff?
Yeah. So it's a great question. And it really is all kind of customer, industry, growth stage specific, right? And to be
This
candid,
is where you say, I'm a lawyer, but I'm not your lawyer.
I don't know. That's true, but I don't, it's fine. The thing is, a lot of, if we're candid, a lot of companies that are in that type of operating mode, mom and pop shops, or call them small service-based businesses, construction type stuff, or landscaping, like a lot of those guys don't need a lot of legal, fortunately, because legal is, we would tell you, legal is like a revenue enhancing type of service for your business, but nobody sees it that way, right? It's a cost, and nobody wants to use it unless they have to. And a lot of small solo businesses that aren't necessarily looking for expansion or for an exit at some point, they don't typically need much IP and maybe even a whole lot of legal if they're not doing those things. Once a company starts saying, well, I'm going to exit, like if you start saying, I need to transition my business someday, which I know you're all about, then you should be thinking about IP. Now, not everybody has patents. A lot of people don't have patents unless that's like, if you need patents, you need patents pretty much. However, there's different flavors of things, like utility patents protect a new device, but sometimes there's an opportunity for a design patent that protects the stylistic or ornamental design of something. If you've got a product that's not really a new product, but it's your own version of it, and we see this a lot in e-commerce, right, where people are kind of white labeling somebody else's product, making some stylistic changes to it, and then they say, okay, I want to protect this. Well, you probably can't get a utility patent on it because it's not a new thing altogether, but you might be able to get a design patent. So there's some layers here.
So this would be like if I designed a more interesting, newer looking kind of bicycle.
Yeah. Yep.
Okay.
You pull up Amazon, anything that you might want to buy today or tomorrow, and say, oh, there's probably a way to put a design patent on that. Not everybody needs to do that. If you're not looking to exit, you're not looking to leverage that patent, then you probably don't need one. Also, a lot of companies, and this might be different for your audience. But if you're in a really fast moving industry, one where, and tech does this a lot, software, SaaS, this is a really, this is a hard place to be with SaaS and patents, because you can patent some types of software, but the industry is moving so darn fast that, especially with AI, that it's really hard to know if your patent will have value for more than 2 years, which ironically, you probably can't get the patent through the patent process in that 2-year period anyway. So you might not have a patent until after you've moved on from that version of the software to something totally different. So really fast moving industries, you don't necessarily need a lot of IP. Really kind of long-term stable, call them mom and pop shops, or non VC, non-growth focused companies. And that's not to belittle anybody. Everybody wants to grow, but they're not looking for hyper growth. They're not out there seeking funding so they can grow, right? If you're in that type of industry, you might not need this. I will say the one exception to that for a lot of people is their trademark, because if you do have any expectation in the future that you might want to sell this business, a trademark is probably going to be your most valuable asset, something that you're, at least from a finance standpoint, somebody can point to your business and say, that's the thing that we're paying the money for, because that's what really protects. I mean, you've got a customer base, but it's the brand and the ability to protect the brand that keeps the audience captive. If you can't protect that brand, you can't necessarily keep your audience captive, especially after you as the owner operator step out of the business, and what's left, what's the remaining connection? It's with the brand itself. And if the brand isn't there, then there maybe is no connection for the buyer, and there's, then no value to the buyer to transfer to you to buy your company. So trademarks are the one exception. You mentioned state registrations. Candidly, we don't do any state registrations. They're just not worth anything in almost every case. Now, that's not always true, but for the most part, if you can get a state registration, then you might as well try for a federal registration, assuming that you meet the criteria, that your trademark meets those criteria.
The place where I've seen small businesses get entwined with this kind of stuff is when, and you might have a business that's been going for 20 or 30 years and never had any problem with any of this stuff, with their name, their trademark, et cetera. And then the business is sold to someone who decides to be a little more aggressive, and they start to enter into other different markets until they run into some other market where there's someone else happens to be in the same line of work with it, with some kind of similarity with their name. And then all of a sudden it becomes an issue where it never was before.
Yeah.
And I've had plenty of people who, have been buying a business and there has been no trademark registration. And one of the things I will say to them is, I'll say, look, you should talk to your attorney about whether this could be trademarked, if that's possible, and if not, maybe it makes sense for you as part of your acquisition and normalization plan to have some kind of 2 or 3 year time horizon where you say, maybe we're going to do a rebrand with this company into something we can trademark.
Yeah.
And to kind of make it the platform for us to grow and go forward, knowing that we've got this secure name that we can operate under that's not going to create problems for us potentially. Especially if you go looking and you find other people out there, maybe with some kind of similarities in the way they're branding themselves, even if they're far away.
Yeah. And that's I always call that the other side of the same coin, right? Being able to get a trademark is one thing that protects you against other people coming in and using your branding for the similar service, right? But what you've described is a common scenario. We run into it a lot of times, and we help people fix that, or at least come to a kind of resolution if we can, with the other party. Because there's this, if you have a trademark registered with the federal government, then you have this presumption of priority, essentially, that you can exist and stop anybody else anywhere in the country from doing it if they came after you. If they came before you, then they might have this, what's called common law trademark rights. And they might, and I'm talking in the US, a lot of other countries, if they have common law structures, will do the same thing. But if they existed before you, but you were able to get the trademark registered, then you can essentially stop everybody except them. Now they're probably going to be kind of contained to the geographic area that they've been operating in and can't expand out of that. And that's the scenario you're describing. If I am that business and somebody comes along and and I'm operating just, I'm in Utah. If I just sell, cookies and baked goods locally and run my business, my bakery in fact, there's a lady, we buy her cinnamon rolls, to take home and bake ourselves for a lot of the holidays. If she, and she's not a client, but if she's been doing this for 15 years, right? She's got her brand. But if somebody else and somewhere else in the country started this and they said, and they qualified and got their own trademark, they could essentially come in and give her a really hard time. She could, if she wants to put the money towards it, prove that she's existed and operated before them, but then she's going to be stuck not being able to expand if she decides to expand, or not be able to expand under that brand. She might have to rebrand, like you're saying. So it's more complicated than it should be in some ways, but it's just how it is.
Well, but correct me if I'm wrong. The protections of a trademark also come with it the obligations of policing your trademark. And
Oh
so
yeah.
I spoke with one attorney once who was talking about a problem they were having with one of their clients who registered a trademark, then failed to police it. Other people started infringing and they didn't do anything about it. And then that weakened the defensibility of their registration, correct?
Yep, that's totally true. You have the obligation, and that's with all IP, whether it's patent, trademark. That's one of the big arguments against people getting patents. They're like, well, if you don't have the money, then you shouldn't even to enforce it. And typically we say it's $1 million, $1.5 million to enforce a patent claim against somebody. So if you don't have the money to enforce it, why even get the patent? That's not totally accurate, but I can see the sentiment there, and I understand why people do it. Not quite as black and white, but it's a factor for sure.
Yeah. So I'm just I personally know of a company that infringes on the intellectual property of other companies on a regular basis
Yeah.
through like parody T-shirts and stuff like this.
Okay. Yeah.
And they have received cease and desist letters,
Mm-hmm.
but they're normally what they do is they reply back and say, "We're so sorry, we won't make any more after we sell the stock," and then they usually don't hear anything,
Yeah.
right? So there's spending $1 million to defend your rights, and then there's just doing the bare minimum to make sure you've planted the flag that show people you're defending your rights, I guess. Is that
Yes, meaning in
a
that
budget focused strategy kind of?
yeah, in that example, you're referring more to the people who are sending a letter but not necessarily following up afterwards. They're not being aggressive enforcers. That's absolutely true. We see everything across the spectrum, from people who don't enforce anything, and if nobody ever challenges it, then that may not be an issue. But there are other companies out there who they watch the trademark register, the publications, things coming out, and they say anybody who's anywhere close to their space, we've had clients who, if you're familiar with the backcountry.com, they sell outdoor, clothing and apparel equipment, stuff like that. They're just known to be very extremely aggressive, and they send a letter to anybody who with the word backcountry in their name anywhere. Now they'll follow through on it too, though, as opposed to some of these people who are in between that send out letters to kind of say, well, we're meeting our obligation to monitor or police our trademarks, but they're not necessarily aggressive about it. I think the more interesting scenario is the guy that you mentioned who's getting the letters, though. I mean, we call that efficient infringement, right? People who they do it enough. Now that's a really derogatory term that's used against companies like Google and Apple, who do this maybe on a very malicious manner against inventors a lot. They've got these alleged ways that they behave in business, and so but when you talk about small companies, a lot of times small companies can be just kind of run under the radar a little bit, and if somebody pokes their head up, unless it's one of these really aggressive companies, they're probably just going to be like, yeah, just sell it through. We wanted to check the box that we're policing it. We don't really want there to be a problem. We don't want this to cost us $25,000 to tell you to stop when you're going to be done in a month anyways, or whatever. So there's this concept of, and I get a lot of e-commerce people who call me and they're like, I found these products and everybody's selling them, but I got a letter that I'm infringing their patent. I don't know why they're targeting me. And it's because they didn't have a patent. Then they did. Once they got it, they sent letters out to 30 people that are selling their products. And the people who were kind of piggybacking on somebody else's product, they just didn't realize there was a real high potential for a patent issue or a trademark issue out there that, this is so I guess what I get at with this is there's a lot of this stuff that you can become aware of. A lot of startup people, a lot of small business people, this isn't what they do. It shouldn't have to be what they're spending their time on, but for a little bit of coordination with an attorney, you could run through your business and you could create a roadmap of where are the potential risks of a business, where am I growing, what are the milestones, what should I be thinking about in my business, and you could pretty much draw yourself a legal map that you could work off, and it would probably cover 80 or 90% of the issues that you might run into, and that way you're at least aware of them in advance instead of being reactive to every situation that comes up.
Yeah. We have a question here from a viewer. This is from Concise Advice. Says, does Mr. Holman offer due diligence services for Main Street business buyers?
We don't do a lot of that. It depends on the business. If you're talking Main Street business buyers, talking like you're buying a laundromat or maybe a franchise location, that's not something that we focus on. It's not our. We're in a different area. If you're talking about something where you're selling an innovative business or buying an innovative business, wrapping that into your portfolio, that being said, I'm pretty liberal with talking to people about their situations. I offer a free 30-minute strategy call for potential clients. So if somebody like this viewer goes online, reads my website, thinks there might be some alignment, they can schedule a call with me, and I'll have a call, and we'll see if it's a fit.
Yeah, I like to say to people, because people are always asking me for recommendations for other service providers, accountants, lawyers, etc. And it really, you have to figure out what the application is you're trying to solve, and then figure out who the provider is that's going to fit with that. And so the more local a Main Street business is, like if it's literally a business on Main Street in a given town, I would tell people find someone to help you with the legal due diligence in that community,
Yeah.
because they're going to have insights into what's going on. They're going to hear things through their other practice. They may have handled
Yeah.
paperwork for the new development going in across the street, which could have an impact on your business. And that an out of state attorney is not going to know any of that stuff.
Yeah.
And
And
yeah.
there's some coming up to speed too, just like you're saying. If you don't have that local institutional knowledge, somebody local might have worked with that buyer before or against that buyer, and they might know, what market. I don't necessarily believe in market that way, but they might know what market terms are for that area and be able to help. And frankly, doing due diligence, what we're used to doing is due diligence in like seed stage businesses. So VC funders coming in, putting in $10 million into a business, and there's some really established forms, very comprehensive as to what needs to be done and what needs to be provided. A Main Street business is probably much more streamlined than that in a lot of ways, and so having somebody who operates with that streamlined approach might be better.
We got another comment here from Capital Flow Solutions. Says, always great guests with discussions on relevant and timely matters. Thank you. Thank you very much for watching Capital Flow. I'll remind everyone tuned in live or on the replay, if you are enjoying the show, please hit the like button. Leave us a comment. It's the easiest way for the algorithm to know that it's a good content program, so we can share it with other new people. That's how we grow. Jeff, the other thing we haven't touched upon yet is that you have actually been an investor in a franchise. And I wanted to ask
owner.
you,
I'm a co-owner with my wife in a franchise, so not even just an investor. I am. Well, I'd say I'm the guy, but my wife is the person who is awesome at this stuff, and we do have a franchise location.
Okay, so I wanted to ask you, from an attorney's point of view, how did you think about the relationship you were entering into with the franchisor? Because the way I describe it is, when you buy a franchise, it's almost like you're signing up for an additional level of government, right? Like you're under the federal government, the state government, now you're under the franchisor. They have their own set of rules and things that you agree to abide by. And I'm just wondering how you went through that whole purchase process and how you thought about all the different things, because a lot of these franchise agreements are pretty open-ended with, sort of what the franchisor may or may not do in the future, and you're kind of agreeing to some things that haven't really been established yet. Can Can you take us through that journey and how you rationalized that it was good for you and your wife to take the risks and to go ahead and do it?
Yeah, and let me say up front because it'll come out eventually. Like we got into this with it's a brand that has sold a lot of studios, a wellness brand. We love the service. We bought it in large part because of the service. The pitch that we got when we were doing this was it was
You mean
not
as the service consumers receive, the
yeah.
customers?
Yeah, yeah,
Okay.
yeah.
Okay.
It's called Stretch Lab. It's an assisted stretching service. So you go in, you get stretched for 25 or 50 minutes. It's like a massage, just many times better, right?
So
Um,
this is I enjoyed the shave so much I bought the company kind of scenario.
yeah, yes,
Okay.
yeah, and so there was so from a let me answer from two perspectives. From a legal perspective, it's pretty easy for me because I am around startups all the time. So I know that there's this rigidity to the legal aspects of the business. And you're right, there everything from a franchise perspective is written to protect and empower and leave the door open for the franchisor, not the franchisee. That side of things doesn't necessarily scare me a whole lot because I'm kind of an experimenter. I call myself a trailblazer. Like I like to see where things happen, where they go anyways. And so I'm pretty good at adapting as things change. That being said, on the non-legal side, on the business side, there's some stuff about the business that we were told that's not totally accurate about how the business is run and the level of involvement and things like that. And so my wife is my COO for my law firm, and she's fantastic. We're full-time in this law firm, and this side business is a lot less of a side business than it was intended to be. So there are aspects of the I call it the business due diligence, the calling the people who are operating and finding truth in this business was really difficult. So we operate a studio that's profitable. We enjoy the service. I'm not meaning to complain about it, but I think there's a reality to it that a lot of times, and this is any business, franchise, otherwise, you look at a business, you do what you can do, and you buy what you think you buy, and then you figure out you actually bought once you get into it. So
Did you open a new location when you signed up with
yeah.
them?
Yeah, we opened a
Okay.
new location. We actually signed up for two locations. We opened one. We started to open a second one, and we pulled back and we said, yeah, we're not going to open the second one yet. The first one was going really well, but it's got kind of this 6-month hump, and then it kind of flattens out and stabilizes. And we were, they want you to build studio number 2 at the 6-month hump, pretty much when everything looks really glossy. We got into it more, and we're like, yeah, we're not opening another studio, not with the underlying financials and the time commitment that it has. It was different than very different than what we had specifically asked them about. Now we asked them about it, and they told us what we wanted to hear, as opposed to anyway. You could read about it. There's a whole lot of layers to this. There's a whole lot of lawsuits going on right now against Exponential Fitness, which owned 10 brands, this being one of them. Derivative lawsuits from shareholders and franchisee lawsuits. Like, there's a ton of stuff. That being said, I mean, the process is still the same. We continue to operate it. We love the service. We're just trying to figure out how to get this, get this business as stable as our law firm business is, right? And so it's a
Right.
puzzle that we're working through, and I think we're making progress on it. But it's
The
interesting.
build up over 6 months, and then it kind of tapered off a little bit. Was that a pattern that, I mean, I'm sure other unit holders. Is that a pattern that has held up in other places too, from the stories you've heard?
Yes, very much so. I'll say if there's a cautionary tale to this, and again, I'm not trying to make it that way, but if there's a cautionary tale to this, people looking to do due diligence in a franchise system like this, what we found was that the demographic of buyers of this business are usually more established, older, maybe even retired corporate people looking to make a transition, right? So you get a lot of people who are going into this in the owner operator mentality. Not everybody, but a lot who are. And then you get a lot of people who, frankly, it's kind of interesting. We didn't know this until we've been in it for 3 years now. You get a lot of people who are really, really used to corporate politics, And so I think, that being said, a lot of the information they would share on the validation calls was much more rosy than, they didn't want to present it in a bad light. It was more rosy than reality. Um, and so finding reality in this particular franchise has been a journey, which, that's you find reality is different from what you see on the outside in any business. And so that's not necessarily unexpected in a way, but when you're the business owner, it hits you and you're like, now we gotta manage and navigate this, right?
Okay.
So
And so, when you were preparing to buy, did you make talking to other owners part of your due diligence? Like, was it a surprise then to you what you learned as you moved into ownership?
we did talk to some other owners. I would say we should have talked to 10 times as many,
Right.
instead of listening to, I don't know, 20, 25 validation calls, instead of talking to 5 or 6 owners, the validation calls are not where it's at. We should have called 50 owners, and we should have asked a lot more questions that way. Overall, it's a business I think that's going to be fine, but it's in the buying process. It's interesting to say, well, the legal side is one thing and the business side is another, and the business side is really where there's probably some things we could have done differently.
Yeah. I mean, I've done a lot of work with franchisees, and I've done some work with franchisors over the course of time. I put out a book called Franchise Warnings, and one of the
Yeah,
things that bits of advice that I give is that you want to talk to people. You need to talk to people who've been in it for a longer period of time, because there is a honeymoon phase where people are still very optimistic when they've opened their new store, even if it's not hitting the numbers. They'll still be very enthusiastic about their
yeah,
decision and everything. And I really recommend people hit the road. Like, you don't want to have these phone call. You don't want to do them as a phone call or a Zoom. You want to go do face to face, because you get the 100% communication, right? You get to see the body language, and you get to see what's going on in an actual place. You might even walk away with some ideas about how other people have their stores set up differently, or something that could be applicable to you. But the death knell for a franchise system is when in the FDD they have to start to demonstrate a decline in units. Once the unit number is going down, then any new prospective buyer is really like, that's like,
yeah.
what are you,
Red flags.
brightly colored diamonds on the snake's back, right? It's like, whoa, there's something going on here. And so I've noticed over time that when there's a new franchise system, they really push hard to get as many sales as they can, as fast as they can, to get that momentum, because they know that some people are going to fail, and they've got to be able to overcome that shrinkage so they don't have a declining number in their FDD, like year over year declines. Because once that happens, they get stuck. That's when they
Yeah.
get into that rut kind of thing.
Yeah, no, that makes sense. We bought it early. The brand, I think Exponential bought the brand in 2017. We bought in 2021. They were still ramping up. They're still in their ramp phase for selling units. That's slowed since. So I think we got in maybe a little too early to see some of the trends for studio sales. And I think again, I hope I'm not presenting this in too negative of a light. There's just a reality to it. And I think that if I were from a buyer's perspective, not an attorney's perspective, attorneys have it easy in these, right? It's like, does the legal paperwork say the stuff that it needs to say? Sure. Buyers have the more difficult position. And having been there, I would say I wouldn't buy into any business, franchise or otherwise, based on the opportunity of the deal. I would buy into it based on the risk, the ability to identify and mitigate the risks in the deal. And that's where, if we were to do it again, we would focus entirely on risks, not upside. We'd focus on downside and how to mitigate that downside if at all possible. I kind of liken this back to when I first graduated from electrical engineering. I was working at a company that was designing power and lighting for hospitals and big commercial buildings, and I was putting all the stuff on the paper so somebody else could go build it. Well, I graduate from college, and I'm like, let's go build a house. We built a house. Somebody else built it, but we did certain parts of it because I'm kind of that way. I like to be hands-on. And I like to try stuff. And I said, I'm designing these huge buildings. I should wire my own house. That would be a good learning opportunity. I did that. And, I won't do it again. And there's some things that looking back on it, I say, well, I missed that, or I did this, or I overspent here, or, next time, if I did it again, I would do it this way. And I think it's the same way, you buy a business and I think there's a lot of those, well, here's what I do differently. Now that's me and my personality. And I'm kind of okay to roll with it like that. I just was at a dinner with some friends the other night. He buys businesses. He's been doing this for 15 years now. And they bought 5 businesses, really run it as 4 because 2 are kind of complementary. They've combined together. His mentality is totally different. It was fascinating to talk with him about his experience buying into businesses, and he's buying larger businesses. But they're, what you call the boring businesses a lot of times. And his mentality with his partner was just different enough that it was interesting to hear. And, maybe there's an aspect of the experimenter personality. You can kind of, the end result of experimenting with purchasing a business might be different than the end result of somebody else buying it in a different way.
Yeah, I say that the difference between someone who starts something new, so I would describe you as doing a franchise startup, like you started a new location.
Yeah.
You have to be entrepreneurial to do that. And people who are more open to buying a business have more of an investor hat on, because they're saying, what is the cash flow and what do I have to pay to obtain it? Right. So it's more of like how you make an investment. And I am fully cognizant of the fact that people dance back and forth across that fence over the course of their life. People who are younger may want to do a startup, and then later they realize what risk was in the business they didn't perceive in the beginning. And then the next thing they want to do, they want to buy because now they're in a different position in life or what have you. And, and then someone with a big successful business might say, you know what, I've got an idea. I'm going to start something new within my existing business, borrowing some of its resources, and that way I'm going to mitigate risk. We see this with big public companies. They're always starting new products, new brands, new services. And if it doesn't work, well, it's not going to take the ship down, right?
Right.
So it's interesting, but I think that there really are 2 different positions to play from. Jeff, this has been great. If people want to meet you, talk with you, potentially explore your services, where can they find out more about Jeff and Intellectual Strategies?
Yeah, I love to connect with people on LinkedIn, so I'm there. It says something about building businesses using fractional legal services. You can find me pretty easily, but also on my website, intellectualstrategies.com. That's where I live. We just redid it. It's really targeted in terms of describing who we work with, how we work, what we do, and the services we provide. And so somebody could get on there, and hopefully you'll read that and you'll be like the last guys that said, hey, I want to feel what it's like to work with you. If that's the case, sign up for a free 30-minute strategy call. You can see my calendar right there on the website and book a call, and we'll chat about the messes you've made, the things you're trying to clean up, the milestones you're building towards, and see if it's a good fit.
Awesome. And I will put both your LinkedIn profile and the website address into the show notes after we're finished with this here today. So anyone who's watching the replay, or if you're listening to the audio, you should be able to find it down in the show notes. And with that, Jeff, I'll say thank you very much for coming over today. It was great to talk to you.
It's been my pleasure, David. Thanks so much.
All right. Bye-bye.
Bye.
So, how can you learn more about buying, selling, financing, and managing small and medium-sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I've prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.